Welcome back to Investing Talk podcast. Today, we're taking a close look at a really fascinating, maybe volatile, but potentially very rewarding area, quantum computing. And our focus today is Sharp. Is Rigetti Computing a good time to buy right now? This is a company really pushing the scientific boundaries. Our sources, everything from analyst reports to financials, they suggest Rigetti might be at a key inflection point. Before we dig into all that data, just a quick reminder, please hit subscribe, like this session if you find it useful, and definitely drop us a comment below. And hey, if there's a specific company you want us to analyze next time, let us know in the comments too.
That's right. And for you listening, our job here is to try and simplify things a bit. We've gone through the financial reports, the analyst estimates we were provided, the technical charts, all to figure out the key facts about Rigetti. It's definitely a high-growth field, but, that comes with significant risk. We need to see if Rigetti really has what it takes to stand out.
Okay, let's start with the basics then. Quantum computing. Most people probably think IBM, maybe Google. So what makes Rigetti different? Where do they fit in?
Well, Rigetti is what we'd call a pure-play quantum company, and they're vertically integrated. That means they don't just create software. They build the whole stack, the hardware, the chips, the cloud platform, everything. And what's really interesting is they're one of the few sort of standalone players doing this outside of big tech. They have their own proprietary superconducting chip IP.
Proprietary tech. So they own the engine, basically.
Exactly. That gives them control over innovation, control over their tech roadmap. It's a big deal.
Right. And if that proprietary tech is the core bet, we should hopefully see that starting to show up in the financials. We know R&D costs a fortune in this space. That's a given. But are they actually turning the science into, actual dollars?
Yeah.
Revenue?
They are, yes. And that's really the first big point supporting the current positive view. Revenue growth really picked up speed in fiscal 24, jumped to $16.2 million.
Up from what, the year before?
Up from $12.1 million in 2023. That's about a 34% increase year over year. Pretty substantial.
Okay, 34% is strong. And looking forward, what are the estimates for this fiscal year, FY25?
The analysts we looked at are generally targeting somewhere between $18 million and $20 million for FY25.
So that's maybe 15 to 25% growth projected for this year. Still solid. But let's pause there because, $16 or $20 million in revenue, that's got to support a huge research effort. How does that connect to the bottom line? Are they getting more efficient?
That's the critical question, absolutely. Rigetti is still pre-profit, no surprise there. But, and this is important, we are seeing better cost control. The quarterly losses are narrowing. Quite dramatically, actually.
Okay, give us the numbers.
So Q2 of this year, fiscal 2025, the net loss was around $6.4 million.
Still a loss, okay.
Yes, but compare that to Q2 of fiscal 2024. Just 1 year prior, the loss was $13.2 million.
Wow, okay, so they've more than halved the quarterly loss in just a year.
Exactly. That's a significant improvement. It shows they're managing costs much better.
That does signal better efficiency, either cutting costs or maybe getting better operating leverage as they scale. So, given that trend, what's the market thinking? When might they actually break even?
The general consensus among the analysts seems to be aiming for break even, at least at the EBITDA level, sometime in late 2026 or maybe early 2027. Now, their gross margins are still negative because of that heavy R&D spend. That's just the nature of the beast right now. But operating expenses seem to be stabilizing. If they can keep managing costs tightly and keep growing that contract revenue, that 2027 target looks achievable.
Right, okay. Cost control is improving, revenue is growing. But this is a capital-intensive business. Survival often comes down to cash. So let's talk financial strength. How does their balance sheet look? How much runway do they actually have?
Actually, their financial position looks remarkably strong for a company at this stage. As of the end of June 2025, they reported $85 million in cash and cash equivalents.
$85 million. Okay, and here's the kicker.
Yeah.
Zero debt outstanding. Zero debt. In this kind of high-growth tech space, that's pretty rare.
It really is, and it's a huge competitive advantage.
So what does that $85 million plus zero debt translate to in terms of how long they can keep going?
Well, you combine that cash pile with the shrinking losses we just talked about. It gives them enough liquidity to fund everything R&D, operations, investments for at least the next 12 to 18 months, probably without needing to dilute shareholders right away.
That's a decent cushion. Gives them options maybe for M&A or just weathering market storms.
Exactly. It provides a significant buffer.
Okay, but even with $85 million banked, the market always watches cash burn like a hawk. Oh, how's the free cash flow trend looking? Still burning through it.
Yes, free cash flow is still negative. That's pretty standard for deep tech companies not yet at full commercial scale. But again, the rate of cash burn is coming down noticeably.
How much?
In Q2 2025, negative free cash flow is about $7.8 million. Compare that to Q2 2024, where it was $14.5 million.
So again, almost having the burn rate year over year.
Precisely. Management seems to be getting much more efficient with their capital. That $85 million lasts a lot longer when the burn rate slows like that.
That whole efficiency story is definitely compelling. But let's switch gears to the competitive side. The moat, as they say. Why should someone look at Rigetti when you've got giants like IBM or Google with seemingly unlimited resources?
Yeah, that's the key strategic question. Their moat really comes from these incredibly high barriers to entry in quantum hardware. We're talking proprietary intellectual property, very specialized manufacturing know-how, and frankly, the talent pool is extremely scarce. You need highly specialized physicists and engineers.
They're making real technical progress, not just talk.
Oh, yeah. They're hitting technical milestones that differentiate them. For instance, they've shown significant progress with their 80-qubit processor, the Anka 2. It shows they can scale.
But I think you mentioned something about fidelity, the error rate.
Exactly. That's maybe even more important than just qubit count right now. They recently introduced a newer 36-qubit chip, the Cepheus 136Q, and the key number there is a median 2-qubit gate fidelity of 99.5%.
Okay, 99.5%. Unpack that for us. Why is that important? Well, think of it like this. 99.5% fidelity means only a 0.5% error rate when performing a basic quantum operation.
In quantum computing, errors accumulate incredibly fast. So reducing that error rate, even by tiny fractions of a percent, is absolutely monumental. It makes the path to actually useful quantum computers much, much shorter.
So it's a real scientific edge that could translate into a commercial advantage.
That's the idea. Better fidelity means you can run more complex algorithms, solve harder problems sooner. It's a core hardware advantage.
And it sounds like they're translating that tech into real business. You mentioned partnerships.
Absolutely. Their hybrid quantum classical approach seems to be resonating. They've locked in some important partnerships and contracts. We're seeing recurring revenue streams from government labs, think DARPA, the Department of Energy, and also adoption from Fortune 500 companies.
Any specific recent wins?
Yeah, a couple stand out. A $5.8 million contract with the Air Force. That's concrete validation. And also a multi-year cloud access deal with a major pharmaceutical AI research group. That shows commercial traction in a key industry.
And didn't they also recently get their chip onto Microsoft Azure?
They did, yes. That significantly broadens their potential user base, makes their hardware accessible through a major cloud provider.
Okay, so the tech is advancing, the financials are improving, they're landing contracts. That all sets the stage for market reaction.
Right.
Let's talk about the stock itself. The performance this year has been, well, pretty wild.
Wild might be an understatement. Explosive is probably more accurate. The stock's definitely in a strong bullish phase. It's up over 300% year to date.
300%.
Yep. Clearly, the market is buying into that future growth story and buying in aggressively. The price, as of our data, was around $35.40.
Okay, a 300% gain. That often screams overbought or running on fumes. What do the technical charts actually say? Is there substance behind this rally?
Well, the technicals actually confirm a sustained uptrend, but maybe not as wildly overheated as you might think. The stock is trading way above its 50-day moving average, which is around $18.80, and its 200-day, which is down near $13.09.
So the long-term trend is clearly up.
Definitely. That confirms the momentum is established. But what's interesting for maybe shorter-term traders, the 14-day RSI, the Relative Strength Index, it's sitting around 47, which is actually quite constructive. It shows strong momentum, but it's not technically an overbought territory yet.
So it suggests there might still be room to run without it just being pure speculation.
Potentially, yes. It suggests the momentum has some underlying strength and isn't just froth.
All right, so based on those patterns, where might the technical suggest the price could head in the, say, near term? By year end.
Looking at the momentum indicators and volume patterns, some short-term technical forecasts suggest a possible move towards the $45 to $52 range by December 2025.
Okay. And what about downside? Key support levels to watch.
The key short-term support level seems to be around $33.62. If it broke below that convincingly, that might signal a pause or a correction is starting. But right now, the trend points upwards.
And what's the overall market sentiment? Is this just, Reddit traders jumping on board, or is there broader support?
No, the sentiment looks pretty bullish across the board, actually. The consensus analyst rating is a strong buy. We've seen some modest insider buying in the last couple of months, too. Nothing huge, but it's a positive signal when management puts their own money in after such a big run-up.
And institutions, are the big players getting involved?
Yes, definitely. Institutional inflows are picking up. The latest 13F filings from Q3 showed new, decent-sized positions being taken by tech-focused funds and even some quantum-specific ETFs. The pros seem to be validating the story now.
Okay, this is where it gets really interesting for potential buyers now. The near-term catalysts. The stock has momentum, financials look better, but what could actually push the stock higher in the next, say, 0 to 3 months? The stuff that isn't already priced in.
Right, the potential triggers. The most immediate confirmed one is the Q3 2025 earnings release. That's expected probably late October, maybe early November.
Oh, is a big one. What are people watching for there?
Continued yo-yo revenue growth, obviously, and crucially, further improvement in those loss ratios we talked about, confirmation the efficiency trend is continuing. Beyond the numbers, people will be listening for any announcements, maybe a new product launch, there are rumors about an Anka 3 chip, or maybe another significant contract win.
Okay, those are the expected things. What about the unexpected? The rumors, the speculative buzz?
Yeah.
What's floating around that could really move the needle?
Yeah, in a sector like this, rumors can definitely drive things. There's some significant, though unconfirmed, chatter about a few key possibilities. One is potential geographic expansion, maybe into Europe or Asia Pacific, opening up new markets, new government funding pots.
Makes sense. What else?
Another persistent rumor is about a potential strategic alliance with another Tier 1 cloud provider. They're on Azure now. Could AWS or Google Cloud be next? That would be huge for access.
Yeah, that would dramatically increase their reach.
And finally, there's ongoing speculation about maybe landing a really big, like 8-figure government mega contract before the end of the year, building on that Air Force win.
Those are definitely potential game changers.
Yeah.
But we have to balance the excitement. This isn't a sure thing. Let's talk risks.
Absolutely crucial to stay grounded. Despite the strong balance sheet, the R&D spend is intense, and free cash flow is still negative. That's a constant pressure. The biggest execution risk, I'd say, is hardware scaling. Can they actually deliver that next-generation 100-plus qubit system reliably, on time, and meeting performance specs? That's a massive engineering challenge.
And the elephant in the room.
Yeah.
Competition. They're swimming with sharks.
Exactly. The competitive pressure is immense. They're up against IBM, Google, Microsoft, companies with practically unlimited R&D budgets. These giants can sustain losses for much longer and can bundle quantum access with their existing cloud empires. Any slip-up by Rigetti, any delay could be quickly exploited by these bigger players.
Okay, so bringing it all together, we've got accelerating revenue, shrinking losses, a strong debt-free balance sheet, clear technical momentum, potential big catalysts, but weighed against that intense R&D burn, execution risk on scaling, and fierce competition from tech giants. What's the overall assessment?
Synthesizing all those factors from the analysis, it points towards an overall highly bullish rating. We came out with something like an 8.5 out of 10. That strong rating is really driven by that positive confluence. The improving financials, the solid balance sheet acting as a buffer, the market confirming the story through the stock price, and those multiple near-term catalysts that could provide further upside, especially in Q4.
So for listeners thinking about this, is this a short-term trade or a long-term investment?
Or both. It seems attractive for potentially two types of investors, really. First, for tactical short-term positioning. Playing the momentum into those Q3, Q4 catalysts we discussed, earnings, potential contracts, or partnerships. But second, it also holds appeal for long-term exposure. It's a way to bet on the whole quantum computing sector's growth, but through a specialized player with proprietary IP. And that proprietary IP makes them an interesting potential M&A target down the road, too, as larger companies look to acquire key technologies. That adds another layer for long-term holders.
That makes sense. Great breakdown of the complex picture here, covering both the significant potential and the very real risks. Okay, so for you, our listener, here's a final thought to chew on as we wrap up. Given just how fierce the competition is in quantum, with big tech constantly on the prowl for innovative tech, how absolutely critical do you think one of those rumored major partnerships or even potential M&A talk might be for Rigetti to truly secure its early lead against those giants with much deeper pockets? Something to think about. We'll catch you on the next session.